Hi and welcome back to Cheeky Crypto. Today, guys, we're going to be jumping down briefly into the world of Bitcoin, taking a look at the most recent price action and what I think is likely to occur next. As I get into the video, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, subscribe, tap the bell, select all the notifications, and you will not miss another video update. And if you haven't yet joined us in Discord, guys, check it out. Linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and it's the first place that we go to notify you of everything that is going on in the crypto space. So keep your finger on the pulse of crypto by joining us in Discord. Okay, guys, let's jump right down into this one. Bitcoin paired up with USDT on the hourly chart, and Binance is our data source. If you're looking to replicate the charts, that's what you need to know. Now, as you can see, yesterday we actually were thinking a bit of a move upwards before we had that collapse to the downside. We were talking about potentially slightly moving upwards, and I did actually correct this on our live stream this morning, but I was looking at it like an A, B, and C structure like this. We failed to actually push up as high as we were thinking yesterday, so we actually ended up seeing this actually retrace quite a bit down to our area of retracement that we were talking about in yesterday's live stream and yesterday's video. So here we were talking about 21,500 to 21,800, and that is exactly where we've consolidated down into at the moment. There are a couple of areas of concern though, and I want to kind of walk you through what they might look like, because I still think there's a little bit further room, a little bit more room to the downside, and we want to talk about that. But essentially, we are talking about end of structure. We are talking about a C-wave structure here, looking like this is where we're going to be consolidating, and an area where we're probably going to range over the weekend. Okay, so as we kind of think about Bitcoin and where that might take us over the weekend, what that might mean to the momentum and oscillators indicators that we actually have on the chart, such as the stochastic or the RSI, then we want to be aware that consolidation and ranging is not a favorable thing for Bitcoin, because right now things are looking pretty favorable for a move to the upside on the daily 8-hour, 4-hour charts. They're looking primed and pretty decent. But over the weekend, when volumes drop and if we do end up in a ranging market, then those oscillators are potentially going to move from oversold to overbought without doing too much price discovery or recovery, and that could end badly for next week in terms of BTC. So let's go ahead and jump down into this structure here. Right, let's point out the areas of concern. So the areas of concern, let me grab my pencil. If I can click it, there we go. This high just up here. Okay, I'm going to just turn that indicator off. This high just here, okay, and in fact, this high and this high here. Okay, so those three are of interest to me, and then this low where we are here. So and the reason that these are of interest to me is we don't really have an interesting structure here. And in fact, let me turn that back off again. Right, we don't have a real interesting structure in here. Now this could be 5. We come up and then we move down in a bigger move. Let me show you from a Fibonacci retracement point of view. Right, if we throw on the fibs from this level and we pull this down to here, we can see that this low down here has ticked over the 1.618. Okay, so it does look like we have this impulsive structure to the downside, and likewise when I take these highs and pull them in, right, we take the fib from a fib perspective here, we take that low and we'll take it from that high there, move this over to here, we also have hit this 1.618 target down here. So the reason that 1.618 is such an important thing when it comes to Elliott wave theory is this is a definition between what is a trend and what is not a trend, and it looks like we've created a trend. So let me first start off with this 1, 2, 3, 4, and 5 here. Okay, then let's come into this structure. Yeah, it's probably here. So 1, 2, and I'm going to say that's either there or there, and we've got a couple of different ways of looking at it. I probably think we'll take it here. We're in some kind of wave 4. We've got to come down into a wave 5. Now we can adjust it to this wick, but I'm going to leave it as if it potentially is a flat correction occurring here, meaning that we can push up a little bit before we collapse on down. Okay, and then of course we have a much bigger structure in play, which would be from the very top here, 1, 2, all of this being 3, then 4, then 5. Okay, so we end up with this kind of nested structure that is concerning. Okay, so this is a concern because it does mean that we are yet to actually finish this C wave, and we can still drop down a little bit lower, okay? But overall, though, it's not a concern because it's a big ABC structure, which means it's corrective, it's short-term, and it's just a corrective move to the downside after a big move to the upside. Okay, so that's a positive. But a ranging market over the weekend could lead us into a small corrective move upwards and then another collapse down, and we end up with a structure that might be slightly long-winded, but we end up with a A, B, C kind of structure, taking us down lower than 20k, lose 20k, and of course then we're just talking about retracement quite a bit into those lows, right? So be aware that things here could get nasty very, very quickly, but also we do have the ability to be positive. Okay, so caution is kind of what I'm going to be saying here. So it looks like we need to do this, we need to finish this off down here, and again, it's possible that we're already in the bigger wave 4. That will appear over time. I think considering a weekend, we're just going to expect wave 4 sideways kind of trading, ranging market, essentially. I'm not expecting too much, but we'll see how that kind of plays out. Now, on this hourly chart, our oscillator, our stochastic RSI is looking for a correction to the downside, so that's an interesting one. Take that off, throw the volumes in. You can see volumes here have been decreasing on the way down, so this is positive, shows us a move is looking to complete. Okay, and we can also see that we are trying to push up a little bit here, and volumes are decreasing as well. So it's interesting. We're not really seeing a lot from the volume point of view. The RSI is low, so it's not too much of a concern, and we haven't got any kind of divergences. We also saw the bearish one just up here, but other than that, that's okay. So let's take this to a 4-hour time frame. On the oscillator, we're oversold, right? So we can see that there. If we go into our volume profiles, again, volume profiles are decreasing over time. Again, you know, we know this. It's nothing unusual. The RSI is in a Nikkei position. That's not too bad. And we do have some hidden bearish divergences, but I think that's already played out. So I'm not too concerned with the immediate future on the 4-hour chart there. Now let's jump to the 8-hour. There is hidden bullish divergence, but that did not play out accordingly. We saw a small push up, and then obviously we saw that collapse come down. So nothing to note there at the moment. Nothing of the immediate interest anyway. The RSI is in a pretty interesting position, pretty good. Volume had been increasing as we started to decrease here on our 8-hour chart. So again, that should be concerning. We're not looking for a good volume to the upside here at the moment. Volume was increasing to the downside. But again, on a bigger macro piece, it doesn't look too bad. The stochastic RSI is oversold, so again, we're expecting some kind of movement to the upside. Now, from the daily perspective, we are oversold. So again, it does look like we have progression here on the daily chart to think about some kind of recovery from this recent move to the downside. The volume, however, is still not looking great. Okay, we have had an increase in volume as we've decreased the price, basically telling us that people are looking to sell, not necessarily to buy. We can also see that there. Now, the RSI has been coming down. It's been, you know, moving quite nicely, but there's still a lot of room and a lot of work to still do there. Up here, we can obviously see our bearish divergence. We were talking about this quite some time ago. That's played out as far as I'm concerned. We've moved down. We haven't seen any additional divergences there. So all of that is looking okay, and I'm not too concerned. Now, if we throw in the HTF liquidity, we can see there isn't terribly too much here on the daily. And, you know, for the most part, yeah, we're kind of evenly spread. I'm not too concerned about that. From an order block point of view, selling order blocks are up here at 25 and buying order blocks are all the way down here at 13. So you can kind of see where is the big liquidity kind of pockets kind of sitting. Well, yeah, we're looking at order blocks being slightly down lower in the charts at 13k, and then 25k is going to be your larger kind of order blocks from selling point of view. Now, obviously, this order block indicator, it is an algorithmic one, so it's not actually pulling actual data. It is just using kind of averages, which I think is based on Bollinger Bands, I think, assuming that people are going to be buying and selling at key areas. It's an interesting way of pulling this into TradingView, but don't think this is 100% perfectly accurate or anything like that. In fact, yeah, I'd probably look at heat map or something to that effect if we're looking for a bit more understanding where the liquidity currently sits. That being said, our volume profiles, we are now starting to come into higher profile ranges from the lower range where the volume profiles just simply were not there. So again, that's quite an interesting one. And of course, we had that golden cross on the 11th of January. But again, golden crosses are subject to individuals, right? And I said this before and I'll say it again. There was many different types of golden cross because you could be looking at moving averages. You could be looking at simple moving averages. You could be looking at exponential moving averages. Then you can get hybrids, which are basically exponential moving averages crossing over simple moving averages, for example, right? So you've got to understand that these will produce different results. If you're looking at a 50 EMA crossing above the 200 EMA, well, that hasn't happened. If you're looking at a simple moving average, 50 above 200, that happened on the 11th. That's what you see here. If you're looking at a 21 EMA over a 200 SMA, for example, well, yeah, that exists. That's there, right? But different results or different numbers get you different results. And essentially, you can find anything that you're looking for just by messing around with the numbers. Short-term average crossing above a longer term average is deemed a golden cross, but essentially, like, there's so many different variations to it. It's not something I really pay too much attention to, but yeah, it is what it is. And obviously the golden cross that everyone's been raving about obviously has not played out accordingly as they would have liked it to, but again, we will kind of on that kind of path. I guess if you've been following along, then you will know that I wasn't really keen on thinking that we were looking at a bullish movement to the upside or anything like that. But essentially, we are where we are with this. Now, we can see from our weekly chart here that we got rejected from the 200 EMA. The 200 EMA is on the larger time frames, kind of your trend filter. You're either going to be trending down if you're below it, or you're trending above it. If you're above it, you're trending upwards, right? That kind of thing. Now, we got rejected on the 200 EMA in August of 2022, and looks like we got rejected again in January of 2023, and we're pulling back down. There are still some options here, though. We are right now, in my opinion, in a potential test of previous supply, right? So basically, this is an area that we were getting heavily kind of finding as resistance. We lost it and we moved down. We rallied through it. Now we're testing. Is this area going to be our supply? Is this supply area going to become a demand area? Is this now our support level, right? And this is basically 21,800 to 22,800. And you can also see there's a little minor level just at 20,800 and 21,400 right down here as well. The upper area is 24.3 to 25.2, and this is obviously the upper area of which is, in my opinion, the major resistance. Not only is this where liquidity sits, but it also happens to be the previous kind of swing high areas as well, and also the 50 EMA that you can see there. But I'm not optimistic about thinking about testing that just yet. And I know a lot of people are going to be looking, look, 1, 2, 3, 4, 5. We're fantastic. We're going to the moon, but we're not doing a 5-wave Elliott wave impulsive structured trend upwards. We do not meet the requirements down here for a wave 1. We've already been through that a dozen times already. It's a 335 overall, and I think we've completed 5 waves, and so we can actually move down from here. So on the weekly time frame, things are looking bearish, right? Not only are we overbought on the stochastic RSI, the volumes are decreasing as we're pushing upwards, but that's pretty much just because the DXY is driving it and not real volume behind it. There's a little bit of FOMO, of course, from retail, but that's essentially that. The RSI is an interesting spot, but not really indicative of either direction. And then, of course, we have got a divergence indicator that is interesting, but it's not really flagging us with any kind of bullish movement or bearish movement at the moment on the weekly time frame. So for the most part, I'm optimistic about thinking we're going to probably be needing to test these lower ranges around the $18,000 level at some point in the future, but nothing moves in straight lines, so be cautious with it. On our Wyckoff accumulation pattern data, very much is following pattern still. As you can kind of see, I had us up in this phase B area, just above the automatic rally, but not on the upper resistance. Automatic rally is over here. This was tagged at 21,888, and the upper resistance at 25,211. Okay, so we're pulling back down as per the schematic of the Wyckoff accumulation pattern 1 and pattern 2. They're both the same at this point, no variations. We're looking to come down and retest the lows of 18,626, which would put us on the secondary test of phase A as the support level. You can kind of see this white line just down here, and it's whether or not we lose this level or find it as support, right? If it's support, then we're probably going to be following pattern 2, and if we lose it as a support level, then we're probably going to be following pattern 1. That's, of course, if these things do not invalidate or become void beforehand. Okay, so now why is 18,600 also of interest to us? From a smart money concepts point of view, that is right down here where we have a supply area, or what was previously a demand area, and we want to find out whether or not this is going to continue to be a demand area. So 18,626, according to the Wyckoff accumulation pattern, would fall in line with a smart money concepts terminology, where we'd actually have a demand area right on that exact area. So it becomes very, very interesting when we start to compare those two things together. Likewise, if we were to come back to our charts and come down to just come to the hourly chart here on Binance, and from an Elliott wave theory point of view, well, then we could start to maybe acknowledge that there's going to be a bigger move to the downside overall. And actually what we're following here is maybe a WXYXZ scenario or something to that effect. But if I just draw it as an ABC, maybe we can kind of complete this move down here, A, and then go up into B, and then come down into C, and start really testing out some of these low areas and start testing out some of these structures. We could be in a long-term corrective move where it takes quite a bit of time to actually play out. But again, our weekly chart on the stochastic is overbought, so bouncing around on the smaller time frames, but it will still gradually bringing us down into the lows is a true possibility, which then falls in line with the Wyckoff accumulation pattern, slowly grinding us down towards a spring event. Likewise, we don't have to have a spring event, but we can slowly grind our way down to $18,000, bounce from it, test those lows for a secondary time, and then rally up from there. So everything across, Elliott wave theory, smart money concepts, and the Wyckoff is actually aligning quite nicely to think that a retracement to the $18,000 level actually would make a lot of sense. Now, we couple this not only with obviously the charts and things that we see here, but we also can reflect in on what the whales are doing in terms of their wallet counts, right? And we bring that data up into play. And if we actually take a look at it from 2022, the last 365 days, right? So basically this runs from, if I bring that up here, the 1st of November 2021 all the way through to yesterday, right? So we can see how these participants have been basically rallying, okay? And we can kind of see the whales, they accumulated down here, I think it was like late February up into March highs, and then basically just slowly grinding down, and they still remain incredibly low. In fact, the November lows in terms of price action, right, at $15,000, we saw them selling afterwards. So you can see the black line, the number of wallets, you can see them decreasing, right, even after that low has come on in. And when we do that and we think about that, why would they be selling if the bottom is already in, right? And so when we follow the money, we know that large money, big money, smart money essentially is exiting their positions, whilst only the kind of dumb money, the retail money, the smaller money is basically coming in and buying up all of the dips and every single bottom that gets communicated by the bigger influencers on Twitter or Instagram or YouTube or whatever, right? So when we start reflecting, okay, Elliott wave theory tells us that we have some downwards pressure. We have a weekly chart that's looking pretty bearish, and we have some interesting kind of areas scoped out from a smart money concept point of view. Then we have the Wyckoff patterns, and then we have obviously all the whale data. Things are not looking overly positive for the future, at least in the short and medium term for BTC. I think long term though, multiple years down the line, I think this is an asset class that's going to continue to grow and thrive, even if the SEC are trying their hardest to make it fail, which I'll probably talk a little bit more about that maybe in the 9 p.m. video today, so do watch out for that one. But hopefully this gives you a bit of an idea as to kind of, a brief update on where I think Bitcoin is at the moment, what I think is potentially on the horizon here over the next few weeks. If you have found it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Don't forget, guys, join us down in Discord, linked in the description below. Guys, until the next one, have a fantastic day.